Welcome back to our channel, where we break down the most important topics in the automotive world. Today, we're diving deep into a unique and sometimes controversial part of the car buying industry: Buy Here, Pay Here dealerships, often abbreviated as BHPH. Whether you're considering purchasing a car from one of these dealers or just curious about how they operate, this video will give you all the facts, history, and expert opinions you need to make an informed decision. Let's start with the basics. What exactly is a Buy Here, Pay Here dealership? A Buy Here, Pay Here dealership is a type of used car dealer that not only sells vehicles but also provides in-house financing to buyers. This means that instead of securing a car loan through a bank or credit union, you make your car payments directly to the dealership itself. In other words, you buy here and you pay here. This business model is particularly targeted at customers who have poor credit or no credit history and may not qualify for traditional auto loans. According to the Federal Trade Commission, BHPH dealerships generally do not check traditional credit scores and instead base their approval process on income and ability to make a down payment. Now, let's take a step back and look at the history of Buy Here, Pay Here dealerships. The origins of BHPH dealerships date back to the early 1970s in the United States, during a period of economic recession. As unemployment rose and consumer credit tightened, many Americans found it increasingly difficult to secure loans for big-ticket purchases like cars. Traditional lenders became more restrictive, leaving a significant portion of the population without access to auto financing. Entrepreneurs in the used car business saw an opportunity. By offering in-house financing, they could sell vehicles to customers who were otherwise locked out of the market. The trade-off? Higher interest rates and stricter payment terms to offset the increased risk of default. By the 1980s and 1990s, BHPH dealerships had become a fixture in the used car market, especially in lower-income communities. According to a report by the National Independent Automobile Dealers Association, NIADA, the BHPH segment grew steadily through the 2000s, peaking after the 2008 financial crisis when traditional credit again became scarce. So, how exactly do these dealerships operate? The process usually starts with a customer visiting a BHPH lot, which typically offers older, higher-mileage vehicles. Instead of focusing on the customer's credit score, the dealer will ask for proof of income, residency, and a down payment, often ranging from $500 to several $1,000s. Once approved, the customer signs a contract to make weekly or bi-weekly payments directly to the dealership. Payments are often required in person, though some dealers now accept online or phone payments. If the customer misses a payment, the dealership may quickly repossess the vehicle, sometimes using GPS tracking devices or remote shut-off technology installed in the car. Interest rates at BHPH dealerships are typically much higher than those offered by banks or credit unions. According to a 2023 Consumer Financial Protection Bureau (CFPB) report, average annual percentage rates (APRs) at BHPH lots can range from 15% to over 30%, depending on the dealership and the customer's risk profile. Let's break down the main advantages and disadvantages of buying a car from a BHPH dealership. Pros: accessibility. BHPH dealerships provide a path to car ownership for people with poor or no credit history. For many, they are the only option when traditional lenders say no. Fast approval. Because the approval process is based on income and down payment rather than credit score, buyers can often drive away the same day. Flexible terms. Some dealerships offer flexible payment schedules, such as weekly or bi-weekly payments, which can be easier for customers who are paid on a similar schedule. Cons: high interest rates. The cost of borrowing is significantly higher, sometimes resulting in buyers paying double or even triple the value of the car over the life of the loan. Limited vehicle selection. BHPH lots typically stock older, high-mileage vehicles, which may be less reliable and require more maintenance. Aggressive repossession practices. Missed payments can quickly lead to repossession, and some dealers use technology to disable the car remotely if payments are missed. Little or no credit reporting. Many BHPH dealers do not report on-time payments to credit bureaus, so buyers may not see an improvement in their credit score, even if they pay on time. According to a 2022 study by the National Consumer Law Center, As many as 1 in 4 BHPH cars are repossessed within the first year of purchase. Now, the big question. Should you consider buying a car from a buy here, pay here dealership? The case for BHPH. If you have been turned down by traditional lenders and need a vehicle immediately for work, family, or other essential needs, a BHPH dealership may be your only viable option. The process is fast, and you don't need to worry about your credit score. For some, this accessibility can be a lifeline. As noted by the Urban Institute, access to reliable transportation is often a key factor in maintaining employment and improving financial stability. The case against BHPH. However, the risks are significant. The high interest rates and strict repossession policies can quickly turn a bad situation into a worse one. If you miss a payment, you could lose your car, your down payment, and any payments you've already made, with no improvement to your credit score. Consumer advocates generally recommend exploring all other options before turning to a BHPH dealership. These include credit unions. Many offer small, short-term loans to members with poor credit. Co-signers. A family member or friend with good credit may be willing to co-sign a loan. Cheaper cars. Consider buying a less expensive vehicle outright to avoid financing altogether. Nonprofit lenders. Some nonprofits offer low-interest loans to help low-income buyers purchase reliable transportation. Let's look at a couple of real-world examples to illustrate how BHPH dealerships operate. Example 1. Maria's story. Maria, a single mother with a low credit score, needed a car to get to her job. Traditional banks turned her down, so she went to a local BHPH dealership. She put down $1,000 and agreed to pay $100 per week for a 10-year-old sedan. After just 6 months, Maria missed 2 payments due to a medical emergency. The dealership repossessed her car and she lost her down payment and all the payments she had made. Example 2. John's experience. John, recently divorced and rebuilding his finances, needed a car quickly. He went to a BHPH lot where he found a car with a high interest rate, but manageable bi-weekly payments. John made every payment on time, but later discovered the dealership did not report his payments to the credit bureaus. When he tried to buy a new car from a traditional dealer, his credit score had not improved. Let's summarize the reputable research sources that back up the facts in this video. Federal Trade Commission, FTC, provides consumer guidance on BHPH dealerships and their practices. National Independent Automobile Dealers Association, NIADA, publishes industry insights and statistics on the BHPH market. Consumer Reports investigates the risks and realities of BHPH dealerships. Consumer Financial Protection Bureau, CFPB, issues reports on auto lending, including BHPH practices and interest rates. National Consumer Law Center, NCLC, advocates for consumer protections in the auto sales industry. Urban Institute researches the importance of car ownership for economic mobility. In summary, buy here, pay here dealerships fill an important gap in the auto market, providing access to vehicles for those who might otherwise be left out. However, the high costs and risks associated with this business model mean that it should be approached with caution. If you are considering a BHPH dealership, make sure to read all the fine print in your contract. Ask if the dealer reports payments to credit bureaus. Consider all other financing options first. Be realistic about your ability to make regular payments. Remember, a car is a significant investment. Take your time, do your research, and don't be afraid to ask questions. If you found this video helpful, please give it a thumbs up and subscribe for more in-depth looks at the automotive industry. Have you had an experience with a buy here, pay here dealership? Share your story in the comments below and watch this next video.